Welcome, everybody. This to another episode of our Instant Payments Decoded. I'm Marcia Klingensmith. I'm the CEO of Fintech Consulting and known across the industry as the Instant Payments Maven. I work with banks and fintechs and platforms to modernize payments in a way that's not only safe, but profitable and inclusive. And excited to have this conversation today. And it matters because CFOs and financial institutions alike are under pressure today to do more with less, as always, right? Faster, safer, smarter. And of course, instant payments alone don't solve for that. But when you connect invoicing and ERP systems and payment rails, you unlock something a lot more powerful. And so today, we're exploring exactly that with two experts leading the charge. We've got Lori Burns, who's CEO of RUBYFIVE, and she helps CFOs automate instant payments directly from their ERP systems. And Andrés Garbarini, he's CEO of Finvix, and he helps helps banks turn invoices into structured, validated, and instant payments. Payable data, sorry, instantly payable data, sorry. So we see a lot of people are joining now. And just to give you guys, before we introduce our speakers here, just a little bit of logistics. We'll be making this available next week on the YouTube channel, so you'll be able to go there. We love questions and interactions. We do have you on mute, so feel free to put comments in the chat and ask questions, and we may pull you off and put you on the spot if you have interest. So there is that. All right. So let's just start painting the picture of what should be possible in the world of ERPs and accounts payable and accounts receivable. So Andres, in a perfect world, what does the gold standard of like invoice to settlement journey look like from the perspective of like maybe a CFO or a business owner? And what would it feel like if accounts payable and accounts receivable and payments were working together as like this one seamless flow?
So first of all, hello everyone. Hi, Marcia and Lori. Thank you so much for having me here. Yeah, as Marcia was saying, we bring wealth of experience in the electronic invoicing world. We currently process over 10 million invoices per month. So I guess we can share a little bit of that experience. What we've seen in the rest of the world, particularly in Latin America and Europe, is first of all a framework. This framework helps not only process everything in a machine-to-machine language, but also brings together the AP, AR, and payment flow all in one, which we've seen really fragmented in the US. Most of our clients already are putting their invoices in autopilot. That means that we are able to, just from the decision of purchasing something through a purchase order, we are able to capture the invoice, see if everything match up, if everything is correct, then green light, and we put basically the paying side in autopilot. So you just worry about the payment once, and it's only when you decide to purchase something.
I love it. So it's kind of like seamless. So what we're but I think today, like, so we know like Latin America, Europe, like they're really good with this kind of like seamless flow. But of course, a lot of us in the US are wondering, like, why don't we have that here? There's a lot of friction in our processes. ERPs definitely don't integrate with instant payments. Well, we haven't even really got robust instant payments adoption, so that'll probably take a while. But let's just talk about that day to day. Like, what are those businesses struggling with today? Because it's kind of messy. So Lori, if I'm a CFO in the US today, you know, chances I'm dealing with like a lot of paper invoices, ACH delays, fraud risks on checks. And so from your perspective, what are those pain points keeping CFOs up at night?
Great question, Marcia. And I want to share, Andres and I have spent some time together, and I will say, as a veteran in the payment space, and even Andre in his invoice accounts payable AR space, I think we've both been shocked when we share information about our countries. I think we've both been surprised how different they are. The gap between the two is, I think Andre's like, you guys are so far behind, and I was like, wow, you're so far ahead. Like, like Finvix is bringing a beautiful AR/AP integrated solution, right? And so the question is, why can't we get to that in the US? And I'm going to get to like the end point with the CFO, but I think we need to break it down, kind of like build up to that. So I think first and foremost in the US, our invoice standards and our payment rails and networks that we use are not really regulated, right? So like other countries, and Chile for example, like it's all regulated. So everybody's using this beautiful single standard. Everybody's doing instant payments. It's all clean. It's very controlled, right, at the government sort of level, but it's very clean, and it's amazing to see what type of innovation can happen on top of that. In the US, I mean, we have good, there's good things about being in the US as well, in that we have more competition, right? We have people doing different business models. The way you move money is not necessarily, it's regulated. However, there's some freedom in kind of the rails you choose to use and how you do it. So that's like probably the biggest foundational difference is regulated kind of environment versus not. And then we have, we have had some cool new rails introduced in the US, and now we're waiting for the banks to put in the infrastructure to support that. So that's step 2, banks putting in the infrastructure to take advantage of some of these cool new things. And that is happening. It's just taken, it's taken a little while. I think, right, the Clearinghouse launched their real-time payments 8 years ago. And we're getting traction on instant payments, with 80% of banks being able to receive and about 30% being able to send. So that's the second layer, right? We got that foundational layer, the second bank layer. And then kind of like now we've got the business layer on top of that. And because CFOs and businesses are using some of these more outdated payment mechanisms, we've got problems with check fraud. 63% of organizations have experienced check fraud. We lost 21 billion in the US to check fraud last year. So it's just taken longer to kind of get to clean, simple payment experiences. And CFOs and businesses are impacted, but they're kind of used to it. They've been doing things this way for a long time. So I think what's great now is there's an opportunity to really disrupt and innovate with new thinking. So it's an exciting time, I think, in the US, and we're catching up.
Yeah, no, I think like the last stat I saw, like we have a little more than 1,500 financial institutions on the instant payment network, but that's out of over 9,000. So we've seen like 15% adoption. And of course, most of them still are receive only. And there's a lot of reasons for that. Part of it is just like legacy infrastructure, conflicting priorities, and then, obviously fraud is a huge concern, because everybody says faster payments equals faster fraud, which is more of a myth, because you can put controls in that on payments to, there's a lot of levers that you can apply. And we're going to talk a little bit later in this conversation about what those levers are. But I think one of the exciting things about like what you guys are doing is like behind the scenes. So a lot of instant payments require UI, like if you want somebody to initiate in payments, and what you guys do is you're working with the APIs behind the scenes. So it's a little bit of a lighter lift for financial institutions. So we're also going to talk about that. So but let's explore a little bit more about, kind of like this global comparison. So, Andres, you had talked a little bit earlier about how other regions have moved faster, like Latin America and like Europe. And I think this isn't necessarily because they have better technology, but more because the the ecosystems in those areas really kind of force them into collaboration, right? From tax purposes. So it wasn't necessarily like there was solid reasons behind this shift. So why don't you talk a little bit about kind of what was that foundation? What can we learn from what they're doing in the other regions? Like how is this? How are some of the kind of the government guidelines helped businesses simplify their payments through automation and standards? And talk a little bit about the drivers behind that.
Yeah, I mean, it's so different here in the US. While the rest of the world implemented electronic invoicing not for efficiencies in the processes, they did it because of kind of tax evasion was a big topic, and also to prevent fraud. Ultimately, well, one of the first countries in the world to implement this was Chile, and the government body that kind of cleared the whole transaction was the tax authority. So most of the countries have adopted kind of these model in which an invoice is created, then there's a validation kind of behind the scenes. You send an invoice to the government body, and then they clear it. So it's more of a clearance model rather than an post-audit model, which is what happens in the US. You can invoice whatever you want, but when you need to file your taxes, you need to be sure that you're filing the taxes for the right amount. So whereas in Latin America and Europe, everything is reported to these government bodies, where it's a PEPL or SII or SAT or whatever the country it is, there's always kind of a clearing process, which enables a lot of efficiencies for the businesses. We don't really see it as a control measure. We see it as a way to organize everything in a certain standard that allows us to enable this communication machine to machine. So for us, it's very exciting every time we come into a new country, understand how everything works. It's kind of the same input and output, but the business process changes a little bit. That's one thing. So I also think that in the US, the level of trust between the stakeholders is way higher. So when you see some initiatives to standardize electronic invoicing across the US, and just for kind of a checkpoint here, there's 25 billion invoices issued in the US yearly. Not even half of them are being paid on time because 70% of them still require manual input. So imagine getting your inbox full of invoices or going to your PO box, whatever, get your mail and have to type everything into a system. There's a lot of room for error. So without a proper mandate, it's going to be hard for these kind of frameworks to move forward. And there's a lot of tech built on top of these legacy, I don't want to call it legacy, but probably inefficient kind of processes to help those same processes become more efficient. So there's a lot of technology built on top. And what we have already seen is that we don't really need too much to make our clients' lives better substantially. So we've seen this. I mean, we came into the US with an idea of kind of changing the whole framework. We soon realized that it was not going to be possible, and then implementing small or changing small parts of this huge mechanism can impact tremendously in the outcome.
So there was a lot in there of interest, right? Like, so in other parts of the world, you talked about how the government's interest and need for kind of collecting taxes from the businesses, so having oversight and understanding what money was moving around, so getting control of that. So that was kind of like their big motivator there. And our government isn't likely to mandate that here. I mean, I guess you guys tell me if you see that as a thing that could happen here. And then you talked about the trust being higher here. I think that's kind of interesting. that there's a lot of trust going on between organizations and enterprises, on the payments front. And then you also talked a lot about kind of like the manual processes, that a lot of these invoices today are still like 70% manual. So, and that's a lot of heavy lifting. That's a lot of cost that these businesses are incurring. And of course, Instant isn't yet the answer in the US because we don't have broad scale adoption. But putting in tools in place can be done today, and we continue to explore that, because I know, Andres, your solution is very seamless and smooth, and it handles a lot of it handles the whole end-to-end business processing. So I'm sure some of these folks on the call, if you deal with businesses, you'll want to maybe reach out to Andres afterwards for a demo. Likewise, with Lori, she has great solutions. We'll talk more about this. All right, so let's talk a little bit more about it from maybe the business side, because Lori, you've worked in banking, you were at Wells Fargo, you spent a lot of time kind of building out these solutions, and you understand kind of like the bank's friction points, and you've spent a lot of time talking to businesses, so you know this stuff inside and out from the business perspective. So you actually have this really great kind of like 360 lens. So where do you see, why aren't we seeing this at scale in the US? Where does the frustration really show up? And I guess, like, how is that creating opportunities for like you and your business?
Yeah, I mean, it is interesting bringing that perspective of having been a banker building solutions inside the bank for small business and treasury customers before fintech really took off, right? And then, we did some great starting kind of products inside the banks, and now we see this era where fintechs are built, like they can just move faster, building great solutions. So we're just seeing that more and more, which is so exciting, especially when we bring something like instant payments, a new capability, to the mix, right? It just opens the door for some really interesting things. And I agree with Andres on like that maybe there's a different business relationship between buyers and suppliers in the US. There's sometimes a contract in place, negotiated terms. So the trust comes with more maybe formal relationship in place as well. But as businesses and suppliers are interacting, like in a B2B space, is kind of what we're talking about here. On the business side, they are really being pressured to do more with less. I think every CFO, it's interesting, like I've talked to so many CFOs, they don't know what instant payments are, that has been fascinating to me. We know in the banking fintech community what instant payments are, and that the clearinghouse and Fed now exist. I really have not run into a single CFO, maybe one, that kind of knew what that was. So there's an education element that we're bringing to what could be. And at the same time, they are being pressured to do more with less. So they do know about AI, right? They might not know about instant payments, but they're getting pressure from their leadership teams to use AI. So I think we're at this interesting crossroads. You can't really put AI on the old stuff, and you can't put AI on bad process because it can only do so much. So I think we're at this really interesting crossroads if we can get to electronic payments and then even get to instant payments. And then the AI that we can put on top of that is really just going to be really amazing. So what do instant payments solve? I'll just kind of touch on that. Like why does a business care? They might not know about it, but why should they care? First and foremost, it brings visibility into their cash position. It gives you command over your cash. So when you're sending checks, you have to plan 10 days in advance. If you're sending even ACH, you're planning 3 to 4 days in advance to create a batch, right? And you might have to, like, because you're batching everything, you might have to like bundle it and wait a couple extra days on a couple payments. And if that batch fails, everything fails. So in a new instant world, we think about that very differently, where everything's that payment goes to the bank, it's cleared. So now you have your books are up to date, your journal entries are made, you have that very clear visibility into cash. And why that's important, I'll give you kind of two real life examples from some verticals. Like in the manufacturing industry, the supply chain is critical. So having clarity on your cash and your purchase capabilities is important. And also your supplier that's being paid wants to know when they're getting paid. So if you want to keep that relationship strong, you want to also give that supplier clarity onto when they get paid. And instant payments go directly into their account, right? And if you're pushing the button to pay, you can be sending the email. So it all happens at the same time. It's not like, hey, we mailed you a check, go look for it. And then we also have on these rails, we have a huge opportunity to bring enhanced remittance. So on the supplier side, that supplier knows what the payment was for, so they don't have to spend time in their accounts receivables process searching. I got a small check for $120, but I don't know where it goes. You could spend hours researching that. I've heard so many stories about both sides of the equation. Cash visibility in the tech sector, I think, is really interesting. We're seeing so many startups, right? PE-backed companies, lots of mergers and acquisitions. So those type of companies, they're understanding their cash is so important because they are on the hook to do reporting, right? A lot of PE-backed firms, they've got to report their cash every week. So they need to be very strategic on understanding their cash position when they pay suppliers. When they need to be able to analyze their burn rates, and they have to be strategic in when to take an early pay discount, or when to be sweeping cash and invest it. So you just, and then once they have command over your cash as a business, then you can even bring AI and start really excelling in cash forecasting, which is kind of where we're going to go next in the industry. Is like really advancing, but you can't forecast until you kind of have clarity on today's position. So again, I think we're at this really cool crossroads with AI and instant payments coming together, as well as embedded. At RUBYFIVE, everything we do, we are an embedded model. So we bring the finance solutions into the systems that the businesses are using every day.
I think you have, you brought up a lot of really great points, Lori. I think one of the stats I've heard is like 80% of businesses fail due to cash flow challenges. And when you're struggling that much with just managing cash flow, having precision control over when your payments are made and ideally received, can be critical. Like instant payments can be done evening, weekends, or you can wait up to the last minute. Like if you're waiting for a receivable to get paid for, a service you delivered or a good you delivered, and then holding off paying that bill to the last minute so you can get that, that control can be super important. And that's one of the values that instant payments brings. And then you talked a lot about the transparency, the cash flow forecasting. As you have, you start automating some of these payments and doing these real time with instant payments, you have it not only happens real time, but both the sender and receiver know when the payment has been made and received. It's irrevocable. And so the receiver then has confidence that they have those funds. That's where the cash forecasting comes in, right? Like, so then they can say, oh, I know I have this money. I can use that money to deploy and buy new inventory or get that, pay off that loan or, redeploy those funds. So, those are all, really important points. And I also thought it was interesting you were talking about how you talked about like, you have to plan 10 days when you're when you're dealing with checks, or 3 to 5 days in advance. And so, this is very empowering to be able to not need that time to plan in advance. Of course, it probably means redesigning your business processes accordingly. So I think we want to take a quick poll. So let me actually launch this for you. We want to get feedback, and if you guys have questions or comments, like we want to hear from you. We've got great experts here, and they want to answer your questions. But let's launch this first question here. Like again, sometimes it shows up as a pop in your screen, and sometimes it shows up in your chat. So if you don't see it as a pop, please go look in chat. But basically, we want to understand kind of what the biggest barrier to automating payables with instant payments at your institution. I guess if you're on the business side, from a business perspective, wherever you're at, is it your legacy tech stack? Is it your no standardization around the data? Is it you're not clear on what your business case is? Risk and compliance concerns. So go ahead and kind of just share your perspective on that. We'd love to hear that. And just while we're waiting on that, like I have a safe to send program that I use with financial institutions, and because what that I always hear a lot about is fraud and risk concerns, and so I help financial institutions identify those use cases that are going to be most valuable to their business. B2B is a great place to focus, or helping businesses. Because businesses have, bring their deposit assets to your organization. You want to retain them. You want to provide services that can attract those businesses and their deposit assets. But you also want to ensure secure experiences. So with my Safe to Send program, I help financial institutions kind of identify all those key areas of risk. There's like 9 different buckets, and what that exposure looks like and how they can mitigate it. So that way financial institutions can feel confident offering their business customers or consumers send capabilities, and then so that you can work with folks like Lori and Andres to offer these capabilities to your business customers. So I don't know if we've already seen the results here. Let me see. I see there's a question. Is there a question in chat? Question here. Given the shift from checks to ACH and virtual cards and accounts payable workflow, how are you seeing real-time payments gain traction? Are there specific verticals or use cases where real-time payments is starting to displace legacy methods? I don't know, Lori or Andres?
I can jump in on that.
Okay.
Yeah. So there are, I didn't touch on this, but there are a lot of solutions that are introducing, I'll call it a newer payment rail in the B2B space, where we're putting payments on virtual cards. So, that's a great way to use the card rails to deliver information to a supplier. That's another, a very popular mechanism. We see lots of like AvidXchange and Bill.com and Defaulty and lots of those players in the market doing that. And that works well for some suppliers that like receiving payments via virtual cards. And those are, often suppliers that are large. They might have like a card integration into their accounts receivable system. So it automates everything for them. But there are also some downsides to that model where the supplier's often paying for card acceptance, right? Even if it's a B2B transaction, if they are getting paid via card, they might be paying the 3% MasterCard Visa kind of charge. So I think there's a real opportunity to real times to disrupt that model, right? When we're doing instant payments, it's got a lot of the same value as a virtual card with the automation, the rich remittance, but at a much lower cost, right? And a much friendlier to the supplier receiving the funds, or the payee receiving the funds, or not paying card fees. So again, I think all payments fit different rails in some cases, but I think we're going to see some disruption. We certainly believe that at RUBYFIVE, as we are a real-time payments first company. So everything we're doing is thinking about what could the world look like when it's all instant, right? And you'd be surprised what that opens up on the accounting side. You rethink your accounting, you rethink reconciliation. So I think there's definitely Going to be disruption there. I think the question referenced what verticals. Verticals where I think manufacturing, verticals where your buyer-supplier relationship is really important to your business. That is a vertical where instant payments is going to take off. If you're a little bit more services-oriented organization, you're just paying service providers, they might take cards. It might be a little bit more card-friendly. So definitely there is a vertical consideration there for sure.
I guess just to add to that, I think those were all really good responses. Insurance disbursements is one area that's an easy, quick hit. Areas like lending, particularly to like auto loaning to auto dealers, that's a pretty popular use case for that. Disbursements, like the gig economy obviously is super popular. Restaurants always run really close to the margins, being able to, pay for their goods, for paying for food over the weekend, right? Getting that money kind of circulated, paying out wage tips is, in cash, it gives them more control, and it's actually safer for the employees, right? So if you walking home at 2:00 in the morning with a pocket full of cash in your wallet, you're open to theft. So it gives everybody a little bit more safety and reassurance. And also like in healthcare industry where there's a high staffing turnover, that could be a great way to attract and retain talent by being able to pay staff the same day. So those are other areas that we've seen some traction. Andres, I don't know if you have any other to add to that.
Actually, yeah, most of our clients abroad are gig economy platforms. So we've seen a huge trend in payouts. If this process would be supported by instant payments, everyone would be more loyal and happier, because these gig economy workers, they just shift from one platform to the other. They're very selfish. So if you can offer them instant payments, that's a super good win.
I don't think we're diving into it too much, but we alluded to it a little bit at the beginning of the call. It's like when you have funds and cash flow that you're worrying about, a lot of organizations are shifting funds from like one account to the other and consolidating to pay bills. Consumers do that too. There's kind of two models, just as a side note trivia, right? Is that people will either push money to like their Venmo and their different apps so that they can pay bills in the most convenient channel, depending on the type of payment. Like if you're paying your friend for roommating, like you'll move your money there. Or consumers can also, like if they're doing the gig work, they have funds in all these different places, maybe on their prepaid card and their bank account and their Venmo account, and then they need to consolidate it in order to pay bills. So it kind of goes both ways. So we noticed on the results there, we saw that business case seems to be kind of like the biggest area of concern. So 40% said unclear ROI, or business case is really kind of the driver. And then other than that, we kind of had a little bit of scattering, legacy tech, the lack of standardizations and risks. So I don't know if you guys have any, Andres or Lori, if you have any comments on that. Is that something aligned with what you're seeing as well when you work with your customers?
I definitely agree on the business case. I think the first reaction especially in the banking world is, okay, yep, everybody, instant sounds great. But then when you are inside a bank to invest in the infrastructure, right, kind of what you help businesses do, Marcia, if you're going to invest in infrastructure, you've got to show some return on that. And the business case is critical. So you really need to know what problem you're solving, right? How does that instant payment bring additional value, and being able to articulate that value in terms that a business understands or your end customer understands. And sometimes that's hard to do when you're inside the bank, you don't out with your clients like one-on-one. And I can speak to that directly, kind of been inside the bank and then being outside the bank and spending more time with businesses where you're actually in their office, you're actually diving in deeper we're really able to articulate and pinpoint where that value comes from. So I think there's a great opportunity here for fintechs to even help banks with business cases, right? Like really round them out, put some financials behind that, so that that bank, if they're trying to promote investing in infrastructure, partnering with a fintech, and most fintechs, we are all happy to articulate our value prop and share that, so we can arm bankers in their journey to getting the infrastructure investment in their budgets. And we all support that, because we all want to see this real-time ecosystem grow, in the US.
I think when we're talking about ROI, there's a couple of areas that you're looking at. One is, cost efficiencies, right? So you're saving a lot of time because you're not having so much manual intervention. Operational efficiencies, you have a reduction in fraud because you know where your funds are at all times, and you have controls you can put in place. And then there's the opportunity for value-added services, which is where you guys come in. Like financial institutions can partner with you to offer new, better services to their business customers. And so this is a way also for financial institutions to make money. So I think those are great opportunities. Let's talk a little bit about blockers, since this is that we were just doing the poll on blockers. Andres, what do you see as structural blockers? Is it regulatory or commercial? Where do you see businesses, banks pushing for change? Where do you see the biggest friction coming? From the business when trying to connect to the bank systems, or the bank systems trying to implement these capabilities for businesses? Where do you see that?
Yeah,
friction?
so there's kind of three things top of mind in community banks, or actually banks or financial institutions right now. One of them is how to keep their deposits in-house. The other one is how to serve their clients better. And probably the first one would be fraud. So there's a shift in the order there. What we offer at Finvix is basically AP and AR capabilities embedded into the banking ecosystem. We've seen that most of the commercial clients of these financial institutions have been migrating to the fintech because their banks are not able to support them with the tools they actually need. One good example that you gave, Marcia, was if I need to split rent with someone, there should be an easy way to do that, right? So I think the banks have been a little bit on the slower side of understanding what their clients want, and I know that that's a consumer need, but it also addresses the commercial clients. But I think that they are not really, they don't really understand, or they're starting to understand actually the value of not only being lenders, but also support their partners and their clients in their journey, their growth journey. So we've seen a shift there where banks are being a little bit more interested in understanding their clients' need, and they don't really have to migrate to a fintech solution. They might just stay within their banking portal, keep the deposits in-house, and operate through the bank.
So is there the integration, I guess, talking about the integration component, when you're working with your service, are there friction points that how do they overcome, or what are the biggest maybe obstacles that they face, and how are they?
So I think there's also a lot of noise in this space. So priorities changes all the time. So there's sometimes where we're moving very fast with an integration, and then everything slows down because there's a new regulation coming in place with, let's say, anti-money laundering, and every drop of attention goes towards that. And yeah, integration is definitely something like a blocker that we are facing. but I guess we're all learning how to make the process smoother. There's also a lot of fraud that we've seen on the end consumer side. So that would be the client. A lot of psychology in those fraud. So we're implementing some barriers at
Social
the
engineering.
business. Yeah. So we're implementing some barriers at that endpoint to make sure that you're only paying what you are supposed to pay to the right recipient.
Party. Yeah, I think that's probably one of the biggest hurdles that folks are with instant payments, because it's like as a push mechanism, you have your greatest exposure with the sender, making sure that you are know who they are, but then also like the human factor, right? There's a lot of that social engineering where you have bad actors saying, you need to that the romance scam, or even like if email communications intercepted and a bad actor, you think it's your business partner, but it's really someone posing as your business partner, and you pay that invoice. Once you pay that invoice to the wrong party, that's not coming back. So it's good to have the controls in place to address that. Lori, when you talk to your corporate, your CFOs, your business owners, are they, what kind of concerns do they have? Are they concerned about, those social engineering scams, or is it something else that kind of keeps them up at night when they think about sending money instantly?
I think CFOs most have, I think almost everybody I've met with and talked to on a daily basis, they've all experienced some sort of check fraud, right? So that is prevalent. I think just moving us to electronic payments is such a leap forward, because we can eliminate quite a bit of fraud there. But I think that's top of mind, check fraud, but then also email phishing, right? Paying the invoice, because some of these bad actors will actually establish a relationship. If they intercepted a supplier's email, they can establish a trusted relationship with a business, and they'll do that for a couple months and then change the bank account details, right? And that one, that's tough. So you need to have controls, right? And the way we think about that is in the B2B space, it's a little bit different when you get to, like, we're servicing middle market businesses with CFOs and treasurers. The relationship with the bank. So on the consumer side of the house, the bank sort of protects you as a consumer with controls. But when you get to the business side of the house, the treasury management side of the bank really has products and contracts written where the onus is on the business to put their own controls in place, right? You might be able to move $50 million a day or whatever it might be, but you're responsible for the controls. So it's really, and that's why I'm such an advocate for embedded finance. So if the business has to decide who can move money, when, how much, we have to have a mechanism for those controls. So an ERP system, an enterprise resource planning accounting system that's robust is a great place for that. So most businesses have already set up strong, and we tend to like review this to make sure they're strong, but they have to set up, businesses have to set up roles, authorizations in their accounting systems to reflect and segregate responsibilities. So the person setting up a new vendor or payee should not be the person approving the invoice or paying the bill. So segregating those roles is just so important. And then we always do an analysis, because sometimes you find businesses they aren't bankers. They don't know all the controls to put in place. So we are always assessing the controls, making them stronger. One of the most surprising things I've learned in my journey is a lot of businesses aren't validating payee bank accounts, supplier bank accounts. If you're using a bank product, yes, that would be happening. But if you're using some sort of direct payment product, a lot of times that's not happening. So here's another amazing opportunity. As we modernize and we get embedded finance solutions in accounting systems, we can bring bank account validation integrated behind the scenes, happening every time there's a new vendor. that bank account should be validated. And anytime somebody calls in and says, oh, I switched to a new bank, can you change my information? That needs to be validated. So I think we can bring new enhanced security controls with some of the new rails too, but it's all about education. We've got, like, on the B2B side, we've got to educate businesses who don't think about this every day. Like, how can they put tighter controls on in their systems, right? Because the fraudsters are just getting better and better and more sophisticated in their targeting and practices.
This is probably a deeper conversation for another day. I know we have like agentic commerce coming in where AI is going to take over some of those manual interventions. And I think one of the strengths of doing the agentic commerce is it's kind of like templatized, like, you know, you're already doing your thresholds. You can only make a payment in this range for this party, for this thing. So it's going to maybe help address some of those concerns as well. So a mix of kind of like manual control, but we'll not going to dig into that too much because that's a whole conversation in itself. So I'm going to line that up for maybe later this year, maybe early next year. We'll do a topic.
Great topic to explore. Yeah, absolutely.
Yeah. Really interesting. Well, because it's still in its early days. And I honestly, my personal opinion is I see, like, right now they're really pushing it as a tool for consumers, but like my personal belief is that I think it's going to be really great in situations where you know the sender and the receiver and there's acceptable thresholds, like supply chain, right? It's like I always deal with this partner, so it's pretty safe. You know, we have a bunch of different suppliers that we work with, so, you know, depending on what's available, what the tax anyway. So anyway, like I said, it's a topic for another day. All right, let's do another poll, guys. How would you describe your institution's current posture on B2B payments? Like, are you guys, do you have it on your, I think that's instant payments and embedded finance on for your B2B payments. So how are you guys looking at that? Is it not on roadmap? Are you exploring options? Are you receive only? Again, look in your pop or in your chat. So while we're doing that, we can also open up the conversation for questions from the audience. And if I didn't say this, but if you guys want to come on cam or on mic, like, just raise your hand and we'll let you kind of speak up. Does anybody have any kind of questions or comments on that? And so what we see, so far, right, what we're seeing is most folks are just exploring options, and then there's just one folk on receive only. So not necessarily send and receive. So why don't you, I guess, like, you know, Andres and Lori, we've oh wait, so I still have some more questions, right? Right. So this is where, okay, so we're moving to awareness and to action. And so there's a huge win to be had for you guys or, you know, financial institutions or corporates from prioritizing flows like these invoice triggered disbursements. So, and actually there was a recent demo done by Matera with QR codes. So this is also a place where QR codes can help improve the experience for automated invoicing and these B2B payments. So that helps businesses gain control, confidence over their transactions, kind of help mitigate some of those fraud exposure points there too. Andres, why don't we go back to you? How are banks and fintechs kind of embedding Finvix today? And which functions, or I don't know, which teams benefit the most? Is Finvix more of like an accounting tool, or like how would you position it?
Yeah, that's a great question. Something that I get all the time. Finvix is not really designed to be an accounting tool. I think what we enable is actually strategic accounting. What we do is we manage in a very structured way accounts payables and accounts receivables with all different flavors in each one of the levels. So we first validate tax information and we make sure that everything is correct, to then move to the accounts receivable side, where we are able to embed a payment link that would rail you to, or rail the business, right, to their most convenient payment method. That's one thing. This usually is, I mean, this is super helpful for the banks, so they can actually get the money straight. The money's not being kept by a fintech. It's going straight to the bank deposit. But on the other side, with the payable side, we enable all these invoice matching processes and protocols. So we make sure that once you created a purchase order and it went through the right process, that's it. Then you can forget about it. Once the invoice is received, we go through it. We make sure that everything is correct, amounts, payment terms, items, everything. If everything match up, we just put it on autopilot, and then our payment partners can disperse all these payments. So ultimately, it's cheaper for everyone, and we're also enhancing the experience of commercial clients through these capabilities.
Sorry, there was looking at the comments. Awesome. And then Laura, so one of the things that I liked about that was just like that seamless experience. So like you were talking about the payment links, you have that QR code as part of your experience. So it's easy for a customer can scan that and then just pick the payment method. And Lori, what about for you? What is like a good entry point? So if a business is wanting like ERP-native instant payments, to streamline their operations, how can financial institutions be better partners to those CFOs, or what can those CFOs do? What's kind of like that entry point? How do they do that?
I think for businesses that are looking for solutions, depending on the size of the business, there are small business solutions on the market that sit outside of your accounting system that might do invoice entry, scanning, and then some low volume payments. I think that they're small business. I think there's more solutions in that market that are pretty good. They typically sit outside of the accounting system. As you go, if you're a larger business and your invoice and payment volume is growing, and you're getting into the 500 to up to, like we have businesses paying 20,000 invoices a month, right? The volume picks up. You really need automation, and then it's important to look for solutions that are integrated in the ERP, right? I believe that syncing data back and forth between other solutions just introduces more connection points that fail. So anything that's streamlined, simple, and secure direct to your bank is going to have fewer failure points. So that's something we focus on. We integrate direct with our business's own bank. We don't funnel payments through a third party or these FBO type accounts. We just integrate directly to their own bank. So it keeps things simple, secure. So something important to look at. I think also a great starting point for a business is assessing the value, right? How important is your supplier relationship? Do you need to be having tight control of your cash? You can sweep it. Or do you need that visibility to take discounts? Do you have a lot of payment terms with discounts? So those are really important things that articulate the value of an instant payment, and it's an easy sell. If you look at the value and you need cash visibility, some of these solutions are an easy sell for your business to invest in. So now what can the financial institutions do? Hands down, financial institutions can help the market evolve by enabling, these real-time payment networks. I think that's just so important. We're all willing to help here and articulate use cases and help the network grow, but both on the clearinghouse with real-time payments and the Fed with FedNow. I think the United States we could have an opportunity to be more efficient, right? And it's a snowball effect. If we start automating on the buyers, one side of the B2B transaction and the other side of the B2B transaction benefits, and then we can introduce electronic invoices and things like that. So it's definitely a two-sided network, and the more we can start to bring solutions that can utilize these rails, the better off we'll be. So
sort of like the chicken and the egg, like which comes first? Who puts that in place first? So I guess, Lori, like you're working a lot with those businesses that already have like their core financial institution already supports instant payments, because obviously they're not going to be able to pay from inside their ERP if the instant payments, if their primary bank doesn't support it. So I mean, that's a good starting point. It's just, I guess, for the audience, like Lori kind of works more with the business side of the equation and ensuring that they have a great experience where they can easily integrate instant payments into their ERP platform, whereas Andrés is kind of delivering a solution more on the financial institution side, so that that financial institutions can provide these experiences. So we've kind of got both sides of the equation here. And actually, Andrés, there's a question in chat for you. Jack wants to know when will e-invoicing be fully implemented across Europe and other countries?
That's a great question, and I would love to say soon, but actually the government body in Europe, which is called Payable, there's like sub-government bodies within each country that they're operating in. We've heard, for example, Spain will have a mandate this year. Now they pushed it towards, for next year. Italy, same story. So it's hard to say. The rules are kind of the same. It's a 4-corner model. So there's 2 access points, 2 businesses, and exchange of documents in the middle. But yeah, it's hard to say when regulations are going to fall. But if you already have one country operating under Payable, or even Latin America, whatever regulation there is, they're very similar. So just a few tweaks and you can cover more countries.
I'm going to just wrap up, but I'm putting my so put your contact information in the chat, Lori and Andrés, and I'm going to just wrap up, but I want to make sure you guys are able to get a hold of Andrés and Lori for follow-up conversations. I'm going to do a write-up with a little more detail and color around this. I now have a Substack where I'm putting thought leadership about instant payments, stablecoin, agentic AI, in addition to this. So these complement each other. So if you're interested in staying on top of, some of the ideas that I'm sharing, make sure you subscribe to my instant payments Maven, instantpaymentsmaven.substack.com. This show will also, the recording will be made available on my YouTube channel, YouTube at Instant Payments Maven. So look for it there. It'll probably take me like a week or two because I have to like put the little header and closer on that. And so if you guys are institutions that are trying to figure out your instant payments send side strategy, that's something that I work with financial institutions a lot. I have a safe to send readiness accelerator program. So if you're curious to learn more, I'm happy to share that. And is there any last minute questions? I don't think we really have time to answer them, but I really thank you guys all for coming. And again, thank you, Lori, Andrés, for joining this, for, sharing your insights on the industry and about your solutions. This has been a really great conversation. And, just folks, make sure you reach out and get any additional questions you have answered. So grab those details from the chat. Thank you all so much.